All right, let's dive into a real head-scratcher that's got the market talking. Reddit just drops a Q4 earnings report that was, by all accounts, an absolute home run. The kind of news you think would send a stock straight to the moon. But it dropped. So what on earth is going on? Let's get into it.
This is the big question, right? It just doesn't seem to make sense. You've got these incredible numbers showing amazing growth and profit on one side, and on the other, you've got a stock price going in the complete opposite direction. To figure this out, we've got to start with the report itself.
So before we get into all the market drama, let's just look at the cold, hard facts. Reddit's Q4 report was, and I'm not exaggerating here, overwhelmingly positive. Think of it like their final report card for the quarter, and they absolutely aced every single subject.
Okay, first up, revenue. Reddit pulled in $726 million. That's a 70% jump from the year before. 70! For a company of this size, that kind of growth is it's wild. It's a huge sign that their business is firing on all cylinders.
And we're not talking about empty growth either. This was seriously profitable. Their net income shot up to $252 million. That is a massive turnaround. We're talking over $181 million better than the year before. It shows they know how to make money as they get bigger.
And then there's this number, the gross margin, which is just incredible, 91.9%. Now, what this tells you is just how efficient their main business is. For every single dollar they make, they get to keep almost 92 cents as gross profit. That is a powerful, powerful engine for any company.
So let's just zoom out for a second and look at the whole picture. It's strong everywhere you look. You've got that 70% revenue growth, a huge swing into profitability, tons of free cash flow coming in, and they're barely spending anything on capital. I mean, on paper, this company looks completely unstoppable.
So, with the report card this good, you'd think the stock would just explode, right? Champagne corks popping everywhere? Well, that is not what happened. And this is where our story gets, well, really weird.
This comment from a user over on the r/stocks subreddit kind of says it all. Right after this amazing report came out, the stock started to fall in after-hours trading. Even the people who use the platform every day were just scratching their heads. It's the ultimate market paradox. Fantastic news, terrible reaction.
But, despite that drop, there was one group of investors, the bulls, who saw a golden opportunity. They were basically looking at this and saying, the market is being completely irrational. This makes Reddit an easy buy.
So the heart of the bull argument is pretty simple. Just ignore the short-term noise. Forget the stock price wiggling around day to day and focus on the actual business. They believe the company's performance is so good that eventually the market will have no choice but to catch up.
And this user on Reddit just lays out the bull case perfectly. The company is a cash-generating machine, it has zero debt, and it could easily go out and buy back $1 billion of its own stock. I mean, those are all signs of a balance sheet that's built like a fortress.
Here's another huge plus for Reddit. They don't have to spend a ton of money to grow. Unlike companies that have to build giant factories or data centers, Reddit's main asset is its platform, and that can scale up without massive new investments. That makes all that profit even more impressive.
And to put that tiny $3.2 million in capital spending into perspective, one user offered this. Let's call it a colorful comparison. Yeah, it's blunt, for sure, but it gets the point across perfectly. It shows just how incredibly efficient Reddit's business model is.
But of course, there's always another side to the story. For the bears, the more pessimistic investors, this stock drop isn't a mystery at all. In fact, they see it as a completely logical reaction to some much bigger issues.
So, the number one argument you'll hear from the bear camp is all about valuation. They'd argue that, yeah, the results were good, but the stock was already priced for perfection. In other words, all that fantastic news was already baked into a super high stock price.
This user really just cuts right to the chase. An 85 times price-to-earnings ratio is incredibly high. It means investors were paying $85 for every single dollar of Reddit's annual profit. For a bear, a valuation like that is just a red flag. It's unsustainable, no matter how great the quarterly report is. Now, the second big argument from the bears actually has nothing to do with Reddit itself. The theory here is that Reddit is basically a perfectly good ship that just got caught in a hurricane, a massive market sell-off that's being driven by fears about the whole economy.
And this comment sums that fear up perfectly. You have investors who actually love Reddit's business, but they're still worried that these big, broad economic headwinds, that's the macroeconomics, could sink the stock no matter how well the company itself is actually doing.
So what we have here are two totally opposite stories. On one hand, you've got a company that is just crushing it. And on the other, you've got a market that seems to be running for the exits. Let's try to put these two views side by side to really understand what's going on.
This really captures the whole conflict perfectly. It's like a giant tug-of-war. On one side of the rope, you have the company's incredible fundamentals, that explosive growth, the huge profits. But pulling hard on the other side are all the market's fears. That sky-high valuation, worries about the economy. Reddit's stock is caught right in the middle.
And this whole situation really gets to a fundamental question in investing, one that's way bigger than just Reddit. It's the classic dilemma. Do you bet on the tangible, proven strength of a company's actual business, or do you bet on the often emotional, sometimes irrational, mood of the market?
And that's really the million-dollar question at the heart of this whole mystery, isn't it? When a company brings home a report card with straight A's, but the market decides to give it a C-, who do you trust? In the end, the answer probably says a lot less about Reddit and a whole lot more about what kind of investor you are.